Hello everyone, welcome back to TechnoChart's YouTube channel. And in today's video, I am going to talk about one of the most important topics of trading, and that is stop loss. So, what is stop loss? The name itself suggests stopping your losses. Stop loss will prevent large and uncontrollable losses in volatile trades. It is to limit the losses so that we are alive to take a trade on next day. Now, if you're not using stop loss, it is only a matter of time when a large position will get out of your hands and you will lose entire profits, and even you can wipe your account in a single day. So stop loss plays a very important major role in risk management, where you can decide your position size and how much quantity to take in a particular stock. So stop loss is one of the most important things in trading, and one should never ignore it. Right? We are now going to focus on five different methods on putting a stop loss. So these five methods have to be applied based upon the stock and what is the trend of a stock, right? Apart from these, there are also different ways to put a stop loss, but our main focus will be these five methods. Now, the first method that we are going to look at is stop loss below support. The second method is moving averages stop loss. The third method is horizontal stop loss. The fourth method is trendline stop loss, and the fifth method is super trend stop loss. So depending upon the trend of a stock, we are going to use the stop loss method. So the first method that we are going to look forward is about stop loss below support. Now this is one of the most common methods of putting stop loss, and if the buyer demand is strong, the stock will generally take support near this area. This is purely based on supply and demand of the stock, and support also breaks during weak markets, and hence we need to apply stop loss to reduce the losses. So in this case, how does the structure look like? This is mostly for stocks that are in consolidation from between support and resistance. Now during these cases, the stock generally moves between the resistance area, that is the red line, and the support area, that is the green line. Now in during this case, one can enter into this stock. If one wants to go long in this stock, one can enter near the lower end of the support, for example in a range like this here, and keep the stop loss below the support area, around 2 to 3% below the support area. And if one wants to short in during this period, one can short around this area while keeping the stop loss near this area. So in this strategy, you should never buy or sell stocks whenever the stock is in range. You should never buy or sell between the area in here, because you may face loss unnecessarily on the sell side also or on the buy side also, because there is no clear trend of a stock, right? So in this case of Jindal Steel, as we can see, let us plot the support and resistance to understand in the live chart. So here we can see that the stock had taken a support here, and the stock is taking a resistance at around this area. So if anyone wants to short Jindal Steel, he can short Jindal Steel, or he can short sell Jindal Steel by here at the current market price also, while keeping the stop loss above 440 rupees. So you have to always check the risk to reward ratio before entering into a trade. For example, in case of Apollo tires, if we look at this now, this is an area that you should definitely avoid buying or selling. So this is what I was explaining, ki you should not enter into such ranges whenever the stock is in the center of the range. You should enter either at the support on the lower part or on the resistance, that is at the higher part. So you have to keep this in mind while entering into any kind of trades. So the second method that we are going to look forward is about support below retest level or horizontal level. Now a concept of reversal of polarity is being considered here, where resistance after being broken becomes support, and support after being broken becomes the resistance. So in case of whenever a resistance breakout occurs with the green candle, now the stock will move forward in few sessions and then again pull back to the resistance area, which should now act as a support for the trend continuation. So in case whether the breakout was strong or not, to check it, if the retest is happening on a successful way and if there is a green candle, right? Now if there is a green candle, then we can confirm that the retest is now successful and the stock is now further going to move up. So in case of this, your stop loss should be below the retest level or below the resistance level where the first candle broke out. Now in case of this, for example, let us check in the live charts where CCL products had a breakout at around 480 rupees. So in this case, if we want to consider this as a successful breakout, so there should have been a green candle here and a trend continuation on the upper side, but now we can see that the stock had broken out of a resistance and again pulled back to the resistance, but now there are continuously two red candles which have now traded below the resistance area. So in this case, we can now say that the breakout has failed, and also the stop loss would have been hit if you would have taken a trade anywhere in between. So in this case, your stop loss should be below the resistance area and around this level. uh, it should be around 3 to 4% just below the resistance area, so that you have some room for the volatility in the stock. In case of BSML, which we had shared earlier also, we can see that the stock breaks out here in this area and again pullbacks to the retest area. So I would consider this stock as weak stock whenever the stock is breaking this low, that is of around 78 rupees. So trend to continue, the stock should be held below the 70, above the 78, sorry, it should be above 78 level, and then we can confirm that the trend is upwards and the stock will now move in our direction or in the direction of bullish. So in the illustrations we can see that how where we can put a stop loss below the retest level. So in this case, sometimes it may also happen, like if the market conditions are weak, the stock may break out on good volumes also, but they may reverse immediately in 1 or 2 days if the overall condition of the market is weak. So in these two examples, we can see that the stock had retested a little deeper and then again pulled back, and the trend continued on the upper side. So in case of the Minda industry also, we can see that the stock was touching just below the resistance area and then moved up. Now in case of, there are many other examples that we can see, for example action construction on the weekly time frame, where the stock moved above the resistance area, then retested the previous resistance area, and we can now see that the stock is slowly moving upwards on the weekly time frame. So during weak markets, the stock may break down of the resistance area also, and in that case we definitely need to exit before a further fall happens in that particular stock. So the third method that we are going to look is of moving averages. Now these are the well known moving averages: 50, 100, 200, and 21. So these moving averages, 21 EMA, 50 EMA, 200 EMA, are one of the most common moving averages used by the institutionals to identify the value zone of a stock. So a trending stock will generally move above the 21 EMA all the time and take support every time on the 21 EMA. So in that case, you have to keep the stop loss below the 21 EMA. A short term stock, a stock that is having a trend on the upper side but on a shorter period of time, then we can see that the stock will take support on the 50 EMA and then move up. So looking at the live examples in the chart, for example, we can see, one second, right? So in this chart we can see the Tata Elxsi chart, where the stock was continuously taking support on the 21 EMI, which is the red line, and finally it broke down here. So here we can see Edgy Infra Engineering, where you could have just bought it at the support area, kept the stop loss below the 21 EMA, and have ride the trend till as far as the stock is above the 21 EMA. This can also help you to trail your stop loss and move your stop loss on the upper side. For example, if you have bought a stock at this area, and then you can see that you can shift a stop. First, your initial stop loss might have been here. Then you can shift your stop loss till here. Then you can shift your stop loss here, and then you can shift your stop loss here. So these are the methods that you can use to move your stop loss on the upper side. Now we can see some examples of 50 MA where the stock trading above the 50 MA took multiple supports on 50 MA. For example, if we take the chart of Usha Martin, here we can see, if we apply the moving averages simply in the chart, the 50 MA, so we can see how the stock was taking a multiple times of support on the 50 MA, right? So this is how you can trail your stop losses as soon as the stock is moving up. So important thing to keep in mind while trading this strategy or while trading the stop losses, your stock should always be in an uptrend or in a downtrend. So while if you are long on a stock, the stock should be in an uptrend clearly like this, and if you are short on a stock, it should be clearly like this. A stock that is trading in zone, for example like this, where the moving averages stay flat, it should never be applied on these charts, because this will give you multiple signals in a time frame, right? So moving averages work only in trending markets and only in trending stocks. So the fourth method that we are going to look forward is of super trend. Super trend uses the concept of ATR, or average true range, where ATR calculates the market volatility value. Now it is multiplied by some factors to generate buy and sell signal, which acts as trailing stop loss in your older trades. So it works really well in trending markets and not advised to use in sideways zone. Similarly, like moving averages, they do not work in sideways zone. So in case of sideways market, you should definitely use a stop loss below the support area or stop loss below the horizontal resistance area where if a stock is breaking out, right? Now, in case of super trend or moving averages, the trend should be clearly higher high, higher low, where the stock is moving in bounces, or the stock should trend should be lower high, lower low for a short sale. Now, it works really well in trending markets as mentioned. So whenever a clear trend is established, you can trail your stop loss with the super trend as the super trend is moving up. Now, once your super trend gives a buy signal, then you can buy it definitely while keeping the stop loss below the super trend. And once it gives a sell signal, you should definitely exit from the stock in a trending market. So in case of sideways zone, for example, MSTC, this is not a stock that you should be using for super trend because the stock is sideways zone. So for example, here we can see that as soon as the stock broke out of the resistance area in case of home first, how the super trend was moving clearly upwards. Now in case of Usha Martin also, apart from moving averages, you could have simply used a super trend to trail your stop losses like this. For example, the super trend gave a buy at 28, around 28 rupees, and finally gave a sell at around 92 rupees before the stock reverse. So in that case, you could have made a lot of money while moving your stop losses upwards. So this is a trend following indicator where it will help you to identify the trend reversal also, or to identify a trend change also in case. Final method of putting a stop loss is of trend line method, where you can plot a stop loss below the trend line method as soon as the stock is moving above the trend line. So in case of trend line, trending stocks tend to pull back on trend lines. This should be used for fresh buying areas, or you can shift your stop loss to upside. Similarly, like super trend or moving averages, as soon as the trend line is broken, then you can sell a stock and take a reverse position in case of short selling, or you can exit from the stock. So in case of Ambuja Cement, as we can see that the stock was clearly moving upwards while taking the support on the trend line, and finally it broke down and also gave upward move apart from the trend line also. But these methods are enough to save your money in case of trend reversal, where Hindustan Unilever has broken down the trend line after a long period of 1.5 year, right? So these are the methods that you can use to identify support or identify stop loss in your trades. So a trend line is only valid when a stock has taken support on that trend line for more than two times, right? So if the stock has taken support on that trend line for more than two times, then we can say that the trend line is valid, and now we can expect a reversal on that. So if the trend line has broken, then it is advised not to take a trade, or it is advised to exit from the stock if you are already having a position. So these are the methods that we had seen today of applying a stop loss. During this market condition, as the overall market condition is weak, you should definitely apply stop loss to avoid big losses, because when we are making profits, we generally tend to book fast, right? So in case of stop loss also, we should definitely book losses as fast as possible, because the whole point of trading is all about probability. So during win, we should always make 100 rupees, for example, and during loss, we should always lose 20 to 30 rupees. So if this is risk reward ratio is not managed, then definitely we are going to make a loss in a long term. And if you like the video, do share it with your friends and like and subscribe the channel.